Today, we're taking a look at a report from Hedge about the Canadian cannabis overview, a look at the last 5 years of recreational sales. Since Canada legalized recreational cannabis in October of 2018, the country has seen significant growth in the cannabis industry. So this report's going to dive into sales growth, pricing, brand development, product innovation, all of that and more coming up.
It's only entertainment.
Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. Since the fall of 2019, we've seen steady sales growth throughout the combined provinces, growing 157% from May of 2020 to May of 2023. And during that period, Ontario and BC have seen triple-digit sales increases with 295% and 140% respectively. Looking at year-over-year sales growth, clear signs that growing is slowing up in Canada. Most of the MSOs can't even pay their taxes right now. Since 2020, that growth has consistently shrunk year over year from 83% in 2020 to less than 30% in 2021. On a macro level, we know that the pandemic created artificial demands that wasn't realistic to sustain, but even the profitability of these companies should be blatantly obvious. Anyone who's paying attention to Tilray or any of these other companies that aren't going to be around much longer are seeing shrinking sales, decreased demand, and a flight to alternative products and better options out there. From the data, we can see that sales growth in the markets come from store count growth rather than growing demand. So new stores across the country are servicing existing demand in untapped areas rather than increasing consumer demand. The 30% growth is attributed to an increase in stores from 1,350 in 2022 to 1,737 just recently. While we've seen sales growth overall in Canada, the average sales per store has failed to maintain that similar pace. Same-store sales dropped 13% from around 200,000 to 177,000 per month. Brand growth in Canada over the last 3 years has been substantial. Since 2020, the number of distinct brands have increased 369%, but the rate of growth is slowing. Total sales in the market have become more significantly concentrated by a small subset of top brands, starting to follow that classic 80-20 rule where the top 20% of brands capture 80% of the total sales. Pricing compression, something we've talked a lot about, has been a major issue across the entire cannabis industry for the last few years. Falling wholesale prices, product prices are eroding margins for retailers, all of that making it difficult for them to try to turn a profit. When you look at inhalables for the price per gram and for non-inhalables, in Canada, when you look at both product categories, they've fallen in the years since adult use legalization. So things like inhalables, which are flower and concentrate pre-rolls, vape pens, all decreased 23% from May of 2020. And then equalized prices for non-inhalables include products like beverages, topicals, edibles, capsules, tinctures, sublinguals. All of those show a reverse trend and initially saw prices increase. However, over the last couple of years, the price compression took hold and saw a decline in those prices. Non-inhalables have decreased a lot in the last 3 years, probably because of the small THC, the heavily regulated products. Current regulations only allow for 10 milligrams of THC per package for edibles. Falling prices have been a big effect on revenue for brands and retailers in the last 2 years. Average price have been decreasing over 15%, while the amount of products per basket have dropped over 5% in the same period, meaning that customers are getting a better value, but at the expense of the retailers and brands. Some of that comes in discounts. The average discount's been drifting upwards in the last few years. The average 420 sale is over 40% now just to get people off the couch and going. So promos are being driven by 3 days a week here in Washington. I'm seeing 30% off Tuesdays, Fridays, and Saturdays. So of course on 420, it has to be a lot more than that. Maybe the most obvious macro trend within product categories is flower waning, #1 position. Flower at the one point captured almost half of the total sales in Canada, but that number is now closer to a third. This is benefiting vape pens, edibles, and pre-rolls. When you look at the first 5 months of 2022 and then the same period of 2023, there's a few category trends that stick out. Like pre-rolls have the most significant rise in the last few years with 23% growth. Edibles, vape pens, beverages, concentrates, all have seen various levels of growth as well. Wellness products like capsules, topicals, oil, tinctures, sublinguals continue to lose their market share, while the percentage of total sales captured by flower is decreased by 15%. This chart is highlighting top 3 segments for each category with the largest percentage change. Flower, pre-rolls, the top 2 product categories of some notable emerging segments. For flower, we've seen high growth for popcorn style products. That's the small little nugs. And the pre-roll consumer the infused segments really taking off. Terpene driven products are hot. Distillate is shrinking, probably because people want live resin vape carts instead. So rosin, which offers a lower potency, grew 55% during the same time when distillate shrunk 6%. Makes sense to me. Since legalization in 2018, the industry has developed with mixed results. Canada has been able to produce year-over-year double-digit sales growth and has seen an ecosystem of brands grow 4.5 times since 2020. But the industry is facing a variety of problems that could potentially pose existential threats to the industry. Current sales growth throughout the country is likely buoyed by store count growth rather than growth in consumer demand. This is cutting into existing retailers. Price compression is seen plagued all North American markets. The focus on industry participants in the coming years should be working smarter and building a business to understand the current trends, tastes, and competitive landscapes. So more reports like this, you're going to have to come back to the Talking Hedge.
With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.
Don't forget to smash that like button on your way out and check out these other videos that we've got.